or in terms of order inflow number what the company has given, which the entire press release is silent, which of course it is. Let's wait to hear from the management in the press conference.
We don't have that yet. Yeah. Mayuresh Joshi is joining in then. Mayuresh, your first up analysis on the numbers?
The numbers better than what we were estimating. So I think it has met street estimates. Order flows again for the quarter we are estimating anywhere close to 29 to 30 odd thousand. So I think the order flows also have been better than what we were expecting. But largely I think, as Varinder was mentioning, I think the management commentary on the respective business lines are going to be extremely important. As in looking at the infrastructure EBIT margins, little bit disappointing on that front. What happens with the power segment order book, that is equally important to be known as well. But largely again, in terms of their individual EBIT performances, and again I think the guidance overall for that 15% order flow mark, 12 to 15% revenue uptick mark, and the margin expansion of 0.5 bips over the next few quarters, whether that can be achieved, how the hydrocarbons will possibly move over the next 2 quarters, that will also be interesting to know, along with heavy engineering and metals and metallurgical segment. So I'm not looking at, I do not have the numbers in front of me at this point of time, but numbers again I think largely have met street estimates, and the orders have been better than what we had estimated for this quarter.
So Mayuresh, orders have not really been a problem for L&T. They have been flowing in fine at least for the last few quarters. But in terms of revenue execution, do you think now that execution can pick up pace after the order book inflow that we have seen strengthening? And also, what do you think is the likelihood of management cutting down its revenue guidance of around 12 to 15%? First quarter they did 9%. Second quarter we are looking at 8% growth, and it is always a lopsided business with third and fourth quarter doing well. Do you expect the management will be able to maintain its guidance?
Hopefully, I think they should maintain the guidance, Anisha, at this point of time. So I think the management commentary, as I said, would be extremely important on these parameters. But again, I think the pickup in execution, I think we're largely expecting the execution to pick up for L&T. What happens with the private sector capex resumption, I think that is going to be equally important. And as you rightly mentioned, I think there is no issues with order flows coming through. So order flows in sectors like defense, hydrocarbon, basic infrastructure, and specifically from the DFC project, the power and T&D project in the Middle East, I think that should hold up. So largely, I think if the management is able to maintain that guidance, I think that can be taken positively by the street.
Anisha, quickly take us through the power sector details, because I saw the bid numbers come down significantly. But what about the order book and the top line as far as the power sector is concerned?
Well, the top line has come in at 1744 crores. That compares with 1340 crores that they did last year. So 30% growth there. But as you mentioned, the EBIT margin has come in a bit disappointing. So the segment EBITDA has come in at 3% versus 5% reported last year, and they mentioned that this is on account of the job mix and the various stages of execution during the quarter. Now the order book of that segment is 17,168 crores. So that looks pretty much all right. They say that their fresh orders, fresh order inflow in the segment is around 2,000 crores. So that is also pretty much all right. Remember, they got a huge order from NLT this time around of around 1,800 crores, and that got factored in. But Mayuresh, if I can just ask you about the asset sale plan of the company as well, how important do you think that is? Because of the last 5 years, we have seen that the return on equity of the company has been declining. They have been mentioning about sale of Kattupalli port or the road assets. So how important do you think is that for the correction of the capital misallocation earlier?
Well, I think that is going to be extremely important as well, Anisha, because if you look at the different businesses in which they have indicated that they might do these asset sales, road assets, for example, the road portfolio, 15 road projects, the FY16 losses were close to 600 odd crores. Again, I think the divestments that they've done so far, I think they've been pretty reasonable. But again, I think the Hyderabad Metro is going to have a big amount of dent in terms of losses to the tune of 500 to 600 crores every year for the next few years as well. The Delhi Metro operations are still loss-making even after 10 years. So largely, I think what happens with their respective sales coming through, whether that be Kattupalli, whether that be road assets, what happens to the different other verticals, including L&T Seaboard. They are in the process of divestment on their L&T Valves division as well. So I think this is going to be extremely critical in getting these loss-making subsidies out of the way, which will also improve cash flows for the entity as a whole.
Okay, we have Rabindra Nayak also joining in. Rabindra, very quickly, what do you make of the numbers? First up, would you take heart from the order inflow, or are there any glaring negatives in the fine print? Of course, we are waiting to see the guidance affirmed or not affirmed by the management.
So we will wait for the guidance of the manager, but the numbers are quite good.
Okay.
So from the past year, the numbers are quite good from the order inflow side and from the profitability side and also growth side. the orders, everything looks good as of now.
Okay, I have a question for Rabindra, you or Mayuresh. Okay, I'm sure that no one will change the numbers based on what the company has reported the numbers right now. So for FY18, most of the analysts on the street are estimating that the company will be doing an EPS of nearly 70 rupees. Okay, what kind of impact of demonetization do you see? The stock is of course corrected around 15% from its 50-week high, but will you be buyer at this level, considering that the demonetization impact we don't know how much and how long that will come in the future?
So let's say, demonetization has very, largely will impact the infrastructure segment of the company, because that is, a lot of real estate projects are actually they take up in those segments. So my sense is that it is not, and L&T takes these projects which are having the developers who are having a good track record. So that's why I don't think they will be significantly impacting the L&T's performance.
Well, actually, yes, Varinder, if I was looking through the details, so there around 6% of the total order book is what is the recent residential realty business of theirs. So 6% is a very small number, and the total order book contains around 10 to 20% of the buildings as well as factory order book of construction of that. So that too might get a bit impacted. And in fact, that if I can get Mayuresh into the discussion as well, the company had guided that they plan to improve their working capital cycle. Right now around its 24% of sales. They had planned to bring it down to 23% level. Now with demonetization coming in, does that guidance of bringing in the working capital under control gets into any kind of hindrance there?
Possibly, Anisha, and yes, I think next 2 quarters might be sort of a hindrance to getting that down to the levels that they were talking about. So even if it stays around these levels but does not exceed the 25% that they probably had been working with over the past few years, my own sense is that slow and gradual improvement will start in place as the dynamics start improving. Again, I think with the asset sales that will probably start taking place, that will also boost their ROEs. So ROEs which are languishing between 11 and 12% will also slowly and steadily start improving. So it's going to be a dual effect. Working capital constraints might still be there over the next 2 quarters because of certain working capital constraint issues that you might.
Mayuresh, based on these numbers, will you advise to buy L&T stock tomorrow if it opens soft? Or would you want to wait for the actual numbers and the impact of demonetization for the next few quarters to see?
So again, I think first one that I think I'd like to see what the management has to say in terms of their guidance and whether they maintain these guidance. Secondly, I think as I've been mentioning, I think demonetization will take a slight toll in terms of their numbers, and the EPS that you're talking about around 70 rupees for FY18. Again, I think that will be dependent and contingent on both these factors working in tandem. So largely, I think I'll wait for management committee to come through. And again, I think there will be opportunities to get these qualitative stocks over the next few weeks as the demand environment and the general consensus on how the growth patterns for capex-oriented industries like L&T pan out. So largely, again, I think numbers have been impressive, but I'll still wait for the management committee to affirm the numbers that they've put up.
Pravin, the same point to you. How would you expect the stock to react tomorrow?
It will react positively.
Okay.
So any key questions, from both of you who would like to ask the management? Anything in particular?
So nothing particular, particularly demonetization, how is it going to impact the working capital and other things, particularly because they are also subcontractors who are working under them, how they are going to, get impacted with the demonetization. Those things, questions, and also the guidance, what the company is guiding up to set it up.
Okay.
That needs to be looked.
My last question to even Anisha or anyone else, okay, the stock is currently trading around 19 to 20 times even 18 estimated earnings. Historically, what kind of earnings, do you think that after every impact of whatever is going around in India or the world, what are kind of multiples you guys are, comfortable with in terms of L&T? Mayuresh?
No, again, as I said, Marinder, I think even if you go with the basic presumption of 70 as an EPS for FY18, you're probably still talking about the stock being traded around 19.5, 20 odd times, which again is quite reasonable considering the entire capex story still to play out on the domestic front, which has not fully got played out. So if one really assumes private capex to probably follow suit, and the government capex coming in a substantial manner, specifically on the domestic front, I think those EPS estimates can still very well be maintained, and then higher multiples can definitely get assigned over the next few quarters. So again, I think valuation-wise, in my opinion, it's not too expensive at this point of time. But again, largely, I think whether we maintain those 70 rupees EPS, assuming that demand conditions do not deteriorate going forward, I think that will be contingent on the next few quarters and the kind of capex spends that actually start coming through in the system.
Okay, but Robin, just last word on these segments. So if you look at it, the infrastructure segment has come in down at around 5.5%, which is really low when compared to 7.2% reported last year. Whereas the other segments of heavy engineering and hydrocarbon seem to be out of the woods. They have reported profit this time. How do you see all these segments panning out? Also the power business, where the margins have come down to 3%.
I have to check detail about the market, but what I see that overall the margin has been better. Infrastructure, there will be some margin recognition might not happen in the certain orders. That could have been, it is always remain volatile. You should see the infrastructure margin in a year basis, not in the quarterly basis. So I expect that the margin will remain what the company has guided. The margin will remain better by the end of this year.
Okay, fair enough. Rabindra, Mayuresh, thank you so much for joining in. Remember, we are expecting the press conference any minute now, and as we have been saying, it's very crucial to understand the guidance, and it's crucial to understand the impact of demonetization. And Varuna, correct me if I'm wrong, it won't just be a real estate or infra. Pretty much every sector aside from IT will see some form of an impact as far as demonetization is concerned. But we need to understand exactly how much and to what degree.
Well, no one knows, Kritika, to be honest. We all know that someone